So today, the Bank of Canada announced its key interest rate hike of 0.25% on Bank Prime, making it currently at 6.7%. That's the 8th consecutive increase in Bank Prime since March of 2022. So what does that mean on your mortgage or any type of unsecured or secured loans that you currently have linked to Bank Prime? For every $100,000 you owe, your payments have increased by $15. On average, the mortgage balance in Canada is about $400,000, so it's increasing your payments by $60. But here's some big wins in today's announcement. The Bank of Canada indicated a pause in regards to any type of further rate hikes on Bank Prime. So as we start to see inflation come down, in fact, last week the Canadian government announced inflation down to 6.3% from its highest point in 2022 at 8.1%. We're definitely trending in the right direction. Now, we're still away from the target rate of 2% in inflation, but we're definitely trending in the right direction. The Bank of Canada indicated a slowdown in the Canadian housing market activity, but also in consumer and household spending. We're starting to see some decreases as well. And as we see that the unemployment rate really hasn't shifted too much, which does affect inflation, we are seeing the consumer spending decline, which is also helping why we're seeing a pause in terms of any other further rate hikes. And here's another big win, fixed rates. Now, fixed rates are correlated to bond yields. Bond yields have come down over the last few weeks. So we started to see fixed rates come down well over 1% of a decrease in fixed rates. So if you're currently coming up for renewal or a first-time home buyer entering into the market, or you're looking to sell and buy, looking at some shorter term fixed rate products are definitely something you want to take advantage of. I mean, we are in spring market, and traditionally we see a lot of competition on fixed rates, which we're starting to see with the banks and lenders. So definitely an opportunity to give us a call so we can look at that, umbrella of suites for you in terms of, which lenders are offering some very competitive interest rates out there. And here's the biggest thing. You know what? We're recovering from inflation. We're recovering from that post-pandemic situation of the lack of supply out in the marketplace, which is demanding on us in terms of, household goods, gas, food prices increasing. We're starting to see that, moderately come down in the right direction. So we're here to help you and navigate during these times, provide you solutions, short and long term, for your financial needs, but also educate you on what's going on in the market, what's going on with inflation. The next time Bank of Canada meets is in March, so we do have a month grace period in February to see how this plays out with this next, this last increase we had today. But definitely make sure you reach out to us. This is a time to take a look at your mortgage, especially if you're in a variable rate product. Let's look at where you're at, where fixed rates are at, what is your tolerance to wait a bit, and see if there's opportunity for you to be able to take advantage of these low fixed rates that are out there. And remember, Bank Prime will eventually go down. It will take time as the market recovers. We will see recovery in 2023 and much stronger in 2024. But this is a time to look at strategies short and long term for your financial success. We're here to support you and educate you every step of the way.